Hello, welcome to Coming Out. This is Triangle Blockchain Development phone call, and we have a special guest tonight. This is Eric Moore. He has the latest updates on SEARS and fascinating info. Eric, by all means, take it away.
Okay, thank you, Blair. Thank you, Blair. Thank you, Adriane. This is our latest update on SEARS Holdings / Transform. And we are doing this update because we have some new information and we have some new numbers. And we have compiled the numbers from publicly available sources. And these numbers are going to show with 100% certainty that the SEARS Holdings bonds that we own and are still buying are in the money. And it's going to show that there is a recovery, a major recovery for the SEARS shareholders. But before we get into that, I'm going to give a disclaimer. This presentation, this PowerPoint, and all of the information coming from Leslie Blair, Rod, Adriane, and others is not financial advice. None of us are stockbrokers or financial advisors or certified public accountants, even though we do have some CPAs in our group that are wonderful and doing great work. We do have some brokers in our group that are doing some great work. We are not brokers, and we are not recommending that you buy or sell any security. This is simply a presentation of research that has been compiled by me, Adriane, and Blair, and/or others. And we're going to present this information from publicly available documents, but we are not recommending that you buy, sell, or hold any security in SEARS or any other stock. This is simply my research and our research that we're presenting to you, and you should do your own research and your own due diligence outside of this information that we're disclosing to you right now. So what we're going to do right now is go to page 1 of the PowerPoint presentation, which should be on the screen now, and I think it is. And we're going to handle a few of the myths that are happening in this particular case with SEARS Holdings. And as you know, SEARS Holdings filed bankruptcy on October 15, 2018. And that might seem like a long time ago, because in October of 2025, that would be 7 years. That would be 7 years since the date that the company actually filed bankruptcy. As you know, on October 29, 2022, the Chapter 11 plan became effective. So we're going to handle some of the myths that are happening in this case, and we're going to go over this presentation. We're not going to keep you long. We're going to have a question and answer at the end. Myth number 1 is ESL Investments and SEARS Investments own 100% of Transform. And as you guys know, Transform is the entity that purchased substantially all of the assets of SEARS Holdings out of bankruptcy. They did so through what's called a credit bid. And you can do your own research and Google what a credit bid is. SEARS had $350 million in debt that was secured, and ESL had roughly $2.4 billion in debt that was secured. They credit bid a portion of their debt. Some of their debt, if not all of it, was converted into equity. But the myth is that Transformco, which you can Google and go to the website now, you can go to transformco.com, or you can go to Transformco Real Estate Properties, plural, properties. Say it again, Adriane.
Transformco Properties.
You can go to transformcoproperties.com, and you can see that these entities exist. Transformcoproperties.com is the real estate, the former real estate of SEARS Holdings, and transformco.com is SEARS Home Services. Kenmore, it's the Sears and Kmart online businesses. It's Craftsman by Sears, royalty income, and it's also any other businesses that are owned, that were formerly owned by SEARS Holdings that are not real estate related. So ESL and SEARS were rumored to be, and misinformation and miseducation online and elsewhere said that they were the only owners of Transform, and regardless of how good Transform is doing, there's just simply no recovery for unsecured creditors that were not SEARS and ESL or shareholders. So we're going to disprove that very quickly. So if you look at this chart, slide 1, under myth 1, says fiction. Transform Holdco bought substantially all of Sears Holdings assets on or about February 2019, and former shareholders and creditors have no interest in this entity. Here's the fact. In a 368A1G reorganization, shareholders receive at least 40% of the stock in the acquirer, which is Transform Holdco in this case. This was confirmed by a law and tax professor named Samuel Thompson Jr. in chapter 16 of his law book entitled Mergers, Acquisition, and Tender Offers, Law and Strategies, 2020 and 21 edition. You can find this book on Amazon.com, and you can find this book at any law school in the United States. It's a very popular book, very popular law and tax book. And Samuel Thompson Jr. is a revered tax and law professor. He was at Yale. I'm not sure where he is now. I think he's at Penn State. Number B, fiction. When Transform Holdco sells assets or earns income, the proceeds have nothing to do with Sears Holdings shareholders and bondholders. This has been rumored, and this has been misinformation for many, many years by multiple people, including Wyco Researcher, Elephant Analytics, and almost everyone online. The hurdle that a lot of people cannot get past is that how Sears shareholders and bondholders have any interest in the entity Transform Holdco. Here's the fact. The proceeds of the previously encumbered assets go to shareholders and bondholders after the payment of the wind down account, which is the SRZ liquidating trust of $240 million. Then the payoff of the junior dip in cash, which was $350 million. And then there was $430 million in admin fees, which were the legal fees and expenses of the bankruptcy. And then in March of 2020, they sold Innovel Solutions. This was an entity that Sears owned, and they sold that for $1 billion. In that press release that's dated March 17, 2020, that's on the Transform Co. website, they announced that all debt was paid except for some mortgages on a little bit of the real estate. So I'll let you do your own research on that, but it's March 17th, 2020. Innovel Solutions was sold to Costco. And when you see that press release, you'll see that there was only a little bit of debt left to be paid. So as of March 2020, there was no debt left to be paid with the exception of real estate debt. So all the non-real estate debt, that's what the quote says, all the non-real estate debt was paid off as of March of 2020. Now, that's been more than 5 years ago. So you're wondering, where's our money? Where's our payout? Well, that money went into various trusts for our benefit, and we're going to get to that shortly. Let's go to slide 2, Adriane, if you will. We're going to go to myth number 2. Myth number 2, after the effective date of the Chapter 11 plan, shareholders and bondholders were simply wiped out. As you can see, I know a lot of people are very excited about AI on Google and ChatGPT. So if you go ahead and put this in a search, this is what pops up. It says, this is the AI overview for the people who only believe AI. The effective date for the Sears Holdings bankruptcy plan was October 29, 2022. This date marked the official end of the Chapter 11 bankruptcy. This date marked the official end of the Chapter 11 bankruptcy proceedings and the start of the liquidating process for the Sears remaining assets. I've been saying this since 2019, but for some reason, AI has finally caught up with me, and now everybody is in agreement that the bankruptcy does not end on the effective date. Only thing that ended was the bankruptcy proceedings, but the liquidation process officially started on October 29, 2022. And we're going to go to the next slide, and we're going to talk about what they were liquidating, and I'm going to prove to you that the unsecured bonds that we own, which are dated December 15, 2019, December 15, 2049, October 15, 2018, and so forth, and October 15, 2048. We're going to prove that those bonds are in the money based on publicly available documents. So this slide says SEARS and ESL. And when we talk about SEARS and ESL, we're talking about SEARS Investments and ESL Investments. As you know, ESL Investments is Eddie Lampert's entity that purchased or the assets out of bankruptcy. SEARS was a secured creditor that loaned $350 million to SEARS in what they call a junior dip loan, which is a debtor in possession loan. You can Google that on your own if you don't know what a debtor in possession loan or a dip loan is. So SEARS and ESL. So here is the answer. SEARS and ESL are getting paid on their unsecured bonds after the liquidation. The bonds they own are in class 4, the same class as our unsecured bonds. So in a Chapter 11 plan, they have classes of recovery. I have a class 1, class 2, a class 3, a class 4, a class 5. In the Chapter 11 plan of Sears Holdings, class 5 is the PBGC, which is the Sears pension, and they're owed roughly $800 million. We're not pensioners, we're bondholders. So bondholders and unsecured creditors are in class 4. And I'm going to show you that SEARS and ESL, their bonds are also unsecured and therefore in class 4. So let's go to the next slide, Adriane. And first of all, before we get to that slide, I want to discuss what happens to bondholders in the same class or creditors in the same class. So this is 11 USC 1123, and this is the section of the bankruptcy code. You can do this in Google or AI on your own. The beautiful thing about AI is you can confirm everything that you're getting and all of this information very, very rapidly. So 11 US 1123 A4 is the section. It says, notwithstanding any otherwise applicable non-bankruptcy law, a plan shall provide the same treatment for each claim or interest of a particular class unless the holder of a particular claim or interest agrees to a less favorable treatment of such particular claim or interest. That really simply says that an unsecured bondholder, unsecured bond owned by SEARS, and an unsecured bond owned by Leslie Blair or Rod or Roderick or Dr. Hardy or Manoj or Danny or Denzel or Adrian Kelly, all of the bonds are in the same class and they must receive the same treatment. So they can't pay ESL and SEARS's bonds and not pay Adrian, Manoj, Leticia, or Blair, or Rod, or Roderick, or Andrew, or Raul. They can't discriminate. Everyone in class 4 in the Sears Holdings bankruptcy are unsecured creditors and unsecured bondholders. So we're going to go to the next slide, and we're going to show you that. So we're going to show you the bonds owned by SEARS and ESL and the bonds that we own. So this is a chart that's in the court record. It's document 3276, page 188. It's document 3276, page 188, if you want to check it for yourself. Here at the top, you'll see that the 6.625% 2L PIK toggle notes, those are bonds. There's 175 million owed on those bonds. 12% of those bonds are owned by ESL. 86% of those bonds are owned by SEARS. If you can see the 6.625% 2L notes, it says 89 million. ESL and SEARS don't own any of those bonds. We own a lot of those bonds. Those bonds are dated October 15th, 2018 or October 15th, 2048. So if you check your account and it says October 15th, 2018 for the date of the bond, or October 15th, 2048, I believe it is, those are the bonds that you own. Those bonds are in the same class. They're all deemed unsecured. So let's go down a little bit further. We see the 8% PIK toggle notes. Those are bonds. 88% of those bonds were owned by ESL. Cyrus didn't own any of those bonds. If you see where it says 8% notes, 411 million right below it, those are the bonds most of us own. The people in our group collectively, and Barnett Capital, which is most of which is a broker for most of us, we own roughly 40 to 41 to 45% of those bonds. Those bonds are dated December 15, 2019 or December 15, 2049. Those bonds are unsecured and they're in the same class as the bonds with ESL. So everything you see on this screen, all of it, are unsecured notes and they're in class 4. We go a little bit further down. SRAC unsecured PIK notes. 94% of those bonds are owned by Cyrus. You go here where it says SRAC unsecured notes, 185.6 million. Cyrus owned less than 1% of those. But we also own some of those bonds. Everything on this screen right here at the top that says unsecured notes held by Cyrus and ESL, this includes our bonds and the bonds owned by Cyrus and ESL. We are all in the same class. They cannot pay the Cyrus and ESL bonds without paying the Adriane, Blair, Roderick, Rod, and Eric Moore bonds. That is in the statute, section 1123, A4. You can Google and you can check WhatsApp. So let me show you the next slide, and I'll show you a little bit of proof in the court where they actually discuss that these bonds will be paid after the sale of the assets. The biggest rumor, biggest misinformation put out by Wyco Researcher, Elephant Analytics, Mevo, and I can't even remember some of these people, these anonymous people online. But a lot of this misinformation that was put out, that is the biggest hurdle for most of you. You don't understand that the bankruptcy officially is over on the effective date, and then the liquidation process begins after that, especially in these kind of reorganizations. So this is slide number 6. And I'm going to quote something from you. I'm going to give you a quote from document 25, page 94 regarding ESL's bonds. It says, even after the purchase of these assets, there was no waiver of 507B claim and other claims in the estate. We are other claims in the estate because any claim that is not ESL or Cyrus are other claims. We are the other claims. Our bonds are other claims in the estate. Let me read it again. Even after the purchase of all these assets, there was no waiver of 507B claim. You can Google what a 507B claim is. But Eddie Lampert was owed a 507B claim and other claims in the estate after the purchasing of the estates, which he explained would leave ESL with very significant claims that would still threaten to take recoveries. So if ESL has claims after the purchase of the estate, referencing their unsecured bonds and their 507B claims, we still have claims after the sale or the purchasing of these assets. That is the hurdle that a lot of you cannot get past. So they were referencing ESL claims. So let's see what they said about this. And they were referencing other claims in the estate. You can look at this up in the document 25, page 94. This was filed in the appeal by the second lien bondholders. And this is SEARS Holdings speaking, not Eddie Lampert. So the debtor spoke and said, we still have to pay ESL and the other claim holders after these assets are purchased. So no, we were never wiped out. Let's go to the next slide when you get a second, Adriane. Here's another reference in open court to Cyrus's and ESL's claims. It says they're still a very large claimant, as is Cyrus in these estates, to have these cases administered efficiently, and I don't want that to be lost on the court. I think he said motivation. They still have claims in these cases. They still have every incentive to cooperate. They still have every incentive to work with the company to minimize the costs associated with administration of the estate. That was said by referencing SEARS and ESL claims. And I'll tell you exactly where it was said.
Eric, I think we have that at document 2886, page 43.
Okay, it's document 2886, page 43. And that was 42. And that was from a transcript in open court. Am I correct, Adriane?
That's correct.
Okay. So in open court, they're referencing payment after the sale. Now remember, we have to liquidate these assets before there can be a payment. Another question I'm going to answer really quickly, and we're not going to be longer. We're going to be very short. I'm going to answer this question. Another question people asked was, why haven't we been paid yet? Because we don't get paid until the assets are liquidated, sold, and the time period for the liquidation is up. We do not know the exact date for the time period, but what we do know is that all the stores have been sold and the inventory in the stores have been sold off, which you'll see shortly. So SEARS and ESL get paid after the sale of the assets. And because of section 1123A4, which is a few slides back, that means we get paid as long as the money is there from the sale of the asset. If the money's not available to pay SEARS and ESL, the money's not available to pay us. But if the money comes in from the liquidation of those assets, is available to pay any bondholders or the pension, class 4, class 5, class 3, all unsecured creditors must be treated equally. All right, we're going to go to the next slide. This is another thing people misunderstood. A business in bankruptcy can liquidate its assets inside or outside of bankruptcy. The Sears Holdings assets were liquidated outside of bankruptcy. Hence, publicly available information says the liquidation process began after the effective date. So the misinformation that was online, the misinformation by even some people who claim to understand investing in bankruptcy, they all said that on the effective date, we were wiped out. There's no recovery. When in fact, the liquidation process actually began on the effective date. That's the effective date of the liquidation, although they were doing sales in February 2019. Remember, they sold Innovel Solution and announced it on March 17, 2020. But the official start of the time period for the liquidation, not the official start of the liquidation, was October 29, 2022. Generally, the IRS allows 3 years for an entity to liquidate. Usually it's 3 years. In General Dynamics, they were allowed to liquidate from 1991 to 1994. They did not file bankruptcy because you don't have to file bankruptcy to qualify to liquidate under Section 368A. You can Google General Dynamics, liquidation, scale down from 1991 to 1994. You can go to Seeking Alpha and go Eric Moore, General Dynamics, and you'll see that they liquidated over a 3-year period. I'm assuming that that law is still in place. So sometime 3 years after October 29, 2022, we may have an announcement. But I think the actual law says at the end of the taxable year. So don't quote me on the time period, but General Dynamics was allowed 3 years, and it's generally 36 months. Could be 48, could be 60, but I have not seen a case where it was longer than 36 months. So we should have and may have some news maybe by February or March of 2026, but don't quote me. So you can liquidate inside of bankruptcy or outside of bankruptcy. We are liquidating outside of bankruptcy as Transform's assets were moved out of bankruptcy on February 2019. And that's when the liquidating process started. You can go to AI, go to Google, check out ChatGPT, and you'll see this is what will come up. I've been saying this since 2019. Okay, we're going to go to the next slide. Here's another myth, major myth. Myth number 3. Payment to shareholders and creditors will come from the SRZ wind-down trust. Facts, the SRZ wind-down trust was only funded with $240 million. A wind-down trust, for everybody who doesn't know, is simply a trust set up to wind down the remaining assets of a company that were not purchased. They have to pay off lawsuits, pay off the final creditors, file the taxes, close down, 50 or 40 different corporations and subsidiaries that Sears Holdings had. That's what a wind down trust is. That is the part that is still in bankruptcy. So the $240 million, and they got to deal with some of the claims and the people who might have sued the company or something to that effect. The SRZ wind down trust is not the trust we get paid out of. That is not the trust that's holding Die Hard, Kenmore, holding Innovel Solutions, over 1,100 pieces of property. Those properties are at Transform in a separate trust. Okay, secondly, unsecured creditors will be paid from two other trusts that were set up to pay us. We're going to go to the next slide, and I'm going to show you the other two trusts. All this is documented. This chart was created by Adriane, but if you see the footnotes, all of this information is in the Chapter 11 plan or court documents. So we just created a chart to make it easier for everybody instead of having to dig up all the information yourself. So as you can see on this screen, the collateral for Class 3 and Class 4 claims. We are Class 3. Cyrus's bonds, Class 3. ESL's bonds, Class 3. Our bonds that we're buying on E-Trade and Schwab and wherever we're getting them are Class 3.
Are we Class 3
Class
or
4?
4?
I'm sorry, we're Class 3 and Class 3 and Class 4. I think the PBGC is Class 5 or Class 3. But regardless, and I could be mistaken, you can Google it or you can click on it. I know the PBGC is Class 5, and sometimes you can be in two classes. But I think the bonds are Class 3 and or Class 4. But you can check it in here. I could be misspeaking. But the purpose... Go ahead. I'm sorry, Adriane.
No, I was just going to say, because at the top of this chart, we identify Class 3 and Class 4, and then underneath it say that the Class 4 unsecured claims, we had that highlighted. I thought from before when we created this, that was most of our people, and then Class 3 with the PBGC. So
I think so. It's Class 3 or Class 5. I could be misspeaking for the pension claims. The PBGC are the Sears pension claims. They're owed about $800 million. Okay, so the purpose of, thank you, Adriane. So the purpose of this chart is to show you that the SRZ liquidating trust is only holding $240 million. It was never intended to hold more than $240 million, and this trust cannot pay us what we're owed. However, the general unsecured liquidating trust assets, that trust has Innovel Solutions, Sears Home Services, the Shop Your Way credit card, 1,100 pieces of unencumbered real estate. And the specified unsecured liquidating trust has over $3 billion in inventory. They have Kenmore, Craftsman, and Die Hard. They have the Sparrow real estate. They have the specified collateral cause of action. They have all these other assets, which we're going to get to very shortly. So people were calling, I think his name is William Murphy or Bill Murphy. He's in charge of the SRZ liquidating trust. And people were in the comment section encouraging people to call the trustee of this trust and asking him if there's going to be a payout to the Sears Holdings unsecured creditors or shareholders. And he emphatically said, no, of course there won't be. And he is correct, because the payout does not come from that middle trust, which is the SRZ liquidating trust. It comes from the other two trusts on the left and the right. And we're going to prove it. And now we're going to show you how much money is available to be paid out. Let's go to the next slide. I think that's the next slide. Well, not just yet. So this is document 2355, page 748. You can look this up yourself. Document 2355-1, page 748. It says the sale of assets and subsequent distribution to creditors and shareholders of the sale proceeds must be pursuant to a single plan and arrangement for tax purposes. As you guys know, this is what's called a 368A1G tax reorganization. You can Google all this information. You do not have to be overwhelmed with terms or codes that I'm stating. You can simply Google and the definition will pop up. And I assure you, a layperson can easily understand it if you just be patient and Google 368A1G tax reorganization. If you Google any term that you hear me say that you don't understand, a term like credit bid, just Google the term And you'd be shocked at how easy this information is to understand if you're patient and you put forth a little bit of effort. All right, so now we're going to go over, in the next slide, the assets and the liabilities of Sears Holdings. In a bankruptcy case, the only thing that matters is assets and liabilities. When it comes to whether or not you're getting paid or not, the only thing that matters are the assets more than the liabilities. If the assets that are sold exceed the value of the liabilities, you're in the money. If they don't, you're not. It's very simple. There are some companies that are insolvent that are publicly trading right now. They're not in bankruptcy, but they're insolvent and they have negative net worth. So being in bankruptcy or out of bankruptcy does not mean you're in better or worse financial condition. You can file bankruptcy because you have assets, but not enough liquidity to pay your bills. And that's what happened with Sears Holdings. Sears Holdings was not broke. They did not have liquidity. They did not have liquidity. If you have assets and you don't have cash, you're not broke. You don't have liquidity. So they got permission from the court, meaning Sears Holdings, the debtors, to get 3 to 4 years or so on to liquidate these assets so they could get liquidity to pay their creditors, including shareholders, bondholders, and the pension. Because it's better for all parties if they liquidate over time. Because when you're selling 1,100 pieces of unencumbered real estate, over 5,000 acres of land, commercial real estate, and Rod can back me up, Roger can back me up, and some of my cousins and my people in development and real estate here, commercial real estate doesn't sell in a week or 2 weeks, generally speaking. You might have a plan you have to present to the city. You may have partners you need to bring in. Commercial real estate can be 6 months, 12 months, 18 months, 24 months. So you need time to get the best price because these people have to get financing. They might have to get city approval. They may have to get approval from the government if it's going to be a government-funded project, etc. So bankruptcy itself does not mean you're broke. Sears Holdings was not broke. They had a liquidity issue. They had a lot of assets that they needed to monetize over time, including real estate, inventory, etc. So we're going to run down this list very quickly, and Adriane's going to click on some of the official sources so you guys can be clear. So the total equity value after all debt is paid off is roughly $13 billion. It's $12.9 billion. We'll round it to 13. If you see the highlighted portions where it says Sears 11/15/2019 notes, that also includes 11/15/2049 notes. I think I might have said 12/15 earlier. I believe it's 11/15. These notes are the bonds that we generally own, but all bonds are listed here on this list. The SRC, unsecured notes, all of these notes are listed. Only $3 billion in debt remained on February 2019. Only $3 billion in debt remained. And there's $13 billion left after the $3 billion remains. So let's run these numbers really quickly and we're going to be done. At the top on the left, it says sale of inventory in 700 stores. The actual number was about 692. We rounded it to 700. There was $3 billion in inventory sold, minimum. The sale of Innovel Solutions, that was the company that we owned that we sold to Costco. And I think, Adriane, can you click on that or are we going to continue?
I can switch windows and click on it for sure.
Okay, if we can pull it up, we're going to pull up the press release if we can. So Innovel Solutions was sold for $1 billion. So, and you can Google this if you want. Innovel Solutions sold to Costco. And we're going to show it really quickly.
Yeah, 1 sec.
But take your time, Adriane. I'm not rushing. So I'm going to show you guys a couple of these, but you can do your own. Here's the press release. The official press release says Costco acquires Innovel Solutions from Transformco for $1 billion. So anything that is alleged, you simply go to ChatGPT or Google's AI platform or another platform, and you simply look it up. It is not smart or intelligent, and it's I don't know what other adjectives, to go to the comment section and believe what's being said when you can click and go to the official sources. because there were people who were saying Transform wasn't sold for $1 billion. And it's clear. It's an official press release that came out, and it's all over Google. So we're going to go to the next one. The sale of the real estate since 2019 brought in $1.7 billion. And Adrian's going to pull up the proof of that number. So Transform Co. has a real estate website. And this is the real estate that our bonds are backing. If you see the website that Adrian has pulled up, called Transform Co. Properties, right here we say 1.7 billion in real estate has already been sold. That means the cash is in hand. Right here, you see 1.7 billion in asset sales. Keep that chart up, Adrian. 1.7 billion in asset sales, and they say the remaining real estate, which is the next line, is worth 1.5 billion. That AUM number stands for assets under management. You can Google all of this. You do not have to be confused. You do not have to wonder what's going on. You can simply Google any letters or numbers you don't understand. AUM means assets under management. So there's $1.5 billion worth of real estate still under management and 1.7 billion in real estate sales. So everything you are seeing is based on publicly available information. I'll say one more thing. If Transform was a private company owned by Cyrus and ESL, two billionaires, they would not publish public financials. Let me say that again. Billionaires and billion-dollar corporations do not publicly publish their financials if they are privately owned. We are creditors and owners of these assets. Otherwise, we would not have access to the financials. So the next, keep that chart up for me, Adrian. The next item is NOL and tax credits. Our NOLs and tax credits as of February 2019 were worth $2.2 billion. They are cash equivalents. Tax credits are cash, and the NOL is the deduction against taxes. So it's a cash equivalent of $2.2 billion. That's what they were valued at by John Willens. You can look his name up. And they were valued by me at roughly that number. But John Willens is an NOL and tax credit expert, and he does large valuations of tax credits and NOLs for more than 30 years. His name is John Willens. You can Google NOLs and tax credits, John Willens, and you'll see his valuation of the SEARS NOLs and tax credits. The next line item, and you can go back to the main chart if you want, Adrian. We'll flip back to that in just a second. So on this main chart that I'm going over now, remember, as of February 2019, we still had income coming in from the Sears Kmart online business and Sears Home Services, which is the largest appliance repair company in the United States and Canada. That revenue was no less than $600 million a year for the last 6 years. So that equals $3.6 billion. And the Shop Your Way credit card made no less than $300 million for the last 6 years. That's how we came up with $1.8 billion. And these numbers are based on previous numbers that were published by Sears. And next we have the sale of, we have leasing income since 2019 from the real estate we own. And do me a favor, Adrian, pull that chart up again. It's on the same page, and we're going to show them that the leasing income from the properties we own, because we had some people redevelop and some people leased some of the old Sears stores and turned them into other stores, and Target took some of the stores, et cetera, et cetera. Right here, you see $620 million net lease value. Net lease value, $620 million. We rounded it to 600 here. So that $600 million is in cash, and it's still coming in. And next, so we have 1.7 billion in real estate asset sales, 620 million in leasing income, and 1.5 billion in assets under management. If we just take those real estate numbers, we get $3.8 billion. The money, all of the remaining debt was only $3 billion. So that means all the bonds that we're buying for $25 and $30 each, those bonds are worth at least $1,000. At least 1,000, because the money to pay all the debt, including the bonds, has already come in. All right, so next on the list is Craftsman by Sears. So we get a royalty on Craftsman products that are sold by Stanley Black & Decker. Stanley Black & Decker bought Craftsman's brand, but all the new products they make, they pay a royalty to us. And that royalty has been no less than $30 million a year since February 2019. So it's been 6 years. So we took 30 times 6 and we got to 180 million. When you go to the footnote, it shows you the link to the Stanley Black & Decker annual reports, and it shows you that the numbers were actually closer to 40 million, but we only estimated 30 because the lowest number was 30. The number is closer to 40 million now. That's another 180 million. Then there were some midterm notes that were auctioned off. I won't bore you with the complexity of that, but it brought in another 81 million. The total amount of real estate sold and cash assets, according to publicly available documents and information, came out to 15,861 million. The total remaining debt as of February 19th was roughly $3 billion. So all the bond debt is paid. All the admin fees from the bankruptcy are paid. The money into the wind down trust is paid. SEARS is paid. They were owed $350 million. The ESL bonds are paid. All of this money is in trust to be paid out to us. There is $13 billion left. I'm rounding, but the official number is 12.9 billion left in cash and real estate. Cash and real estate. As you see, the real estate was roughly 1.5 billion. So that means the cash amount has to be at least 11.5 billion in cash after bondholders are paid off. So
Could you repeat that, please? I think you mean 15 billion?
I'm sorry. So it's $15 billion. So 15,861. Wonder if you can blow that up for me, Adriane.
Sure.
Let's blow up this number. So this is the total from the liquidation and the ongoing businesses since February 2019. It's 15,861 million. We're deducting $3 billion in debt that the company carried into the bankruptcy and outside of the bankruptcy. When we deduct the $3 billion, which includes paying off the bonds, paying off the real estate loans, paying off the pension debt of 800 million, when we deduct that, we end up with roughly $12.9 billion, call it 13 billion, left for shareholders. So the bondholders are only owed, give or take, $600-700 million. There's literally 12 times more money available than what the bondholders are owed. 12 times the amount. And the bonds most of us own are highlighted. All unsecured bonds are treated equally. The pension debt is also unsecured and it's treated equally, that 800 million. So after the $3 billion in debt is paid off, there's roughly $13 billion left for the Sears shareholders. I believe that's the end of the presentation. And if you see the footnotes, all of the documentation and the proof is found in the footnotes. You can click on those footnotes or you can Google for yourself, and these numbers will come up. All of these numbers come from publicly available documentation and information, with the exception of the Sears Kmart online Sears Home Services revenue, because those numbers are based on disclosures during the bankruptcy or prior to the bankruptcy. So if those numbers have stayed roughly the same, the only numbers, and they have stayed roughly the same according to publicly available documents. If we cut this number in half, we'd have roughly $8 billion, but we only have $3 billion in debt. But all of these numbers are publicly available to everyone. And what's the websites where they can pull up the information on Transform Real Estate again, Adriane?
Transformco Properties with an S.com.
Okay, so that is where you see the real estate that we pulled up, and the real estate alone pays off all the bonds, pays off all the pension, and makes us whole. This is a publicly available website, And this is the website you should be following. You should not be following the comment section or stock twits. Follow the official website for the properties from the Sears bankruptcy. And that's the end of the presentation. Are there any questions?
Blair, do you have a question?
I have a question. E?
Okay, go ahead, Blair.
I think it's important to say for those people who are really looking at this like for it to hurry as fast as it can per se, the magnitude of what you just outlined and explained, this is a great big event, once in a lifetime type of event.
Yes.
And I don't think it's something, if I may say, I don't think it's something. Well, I think the message you're conveying here is we're getting paid while we wait. I just wanted to make that kind of clear. While we're waiting, our investment is growing.
Yes. And our money is being held in trust. And as the money comes in and as these assets are liquidated, and as Craftsman by Sears pays royalties every year, and as the leasing income comes in, and as the credit card makes money, and as Sears and Kmart online, they're still making a lot of money. That money and those businesses belong to us. So this is just the cash and real estate. This is not the value of the ongoing businesses that are still operating. That's just how much cash the new company we're going to be a part of has. And real estate, that's another 1.5 billion in real estate. So when you deduct that from 13 billion, there's 11.5 billion in cash minimum that is in the company we own with no debt and no taxes probably for the next 10 years. So this would probably be the most financially strong and stable company in the top 5% of strong and financially viable companies on the entire stock exchange once we go public again. How many companies right now, and you can check with ChatGPT, some of you, have more than 10 billion in cash and no debt? I bet you won't find 5.
Wow.
I bet you won't find 5. How many companies have more than 10 billion in cash and over $1 billion a year in revenue and don't have taxes for maybe 10 or 15 years because of the NOLs and tax credits? You won't find 5. So when this company is public again, which I predict will be soon, when the real estate company is public again, which I predict will be soon, and soon could be 6 months, 9 months, or a year or longer, these companies will be among the top companies on the stock exchange because of their financial, their cash position, no debt, and no taxes. It's all upside from here.
Right.
All right. Any more questions? Any questions, Adriane? Comments?
Got to unmute, Adriane.
How about now? Can you hear me? Thank you.
Yes.
Okay, so I do have a couple of things. Small question, but it was distracting to me while I was listening to your presentation. On the slide where we were talking about the different kinds of bonds, and I'll pull it up so you can know for sure what I'm talking about. In this upper right-hand corner, it says, it's talking about the collateral on these bonds, substantially same as first lien, no pharmacy assets or cash. What in the world is a pharmacy asset? Do we know? Do we care?
Yes. We have pharmacies at Kmart because Sears owned Kmart. And Medicare and all of those people put payments in, and they had like lots and lots of money that was there, and those assets, that cash and those payments might be like $200, $300, $400 million worth of payments that have already are due because maybe Medicaid pays every 60 or 90 days. So these bonds were second lien, and only the first liens had a lien on cash and the pharmacy assets, but these bonds were deemed unsecured.
Got it.
Yeah, so that's what that was. So they usually list the collateral. And if you see right below that, it says collateral unsecured, unsecured. But originally, the second lien bonds were actually deemed secured. And as part of a settlement, because you see how much Cyrus and ESL owned of those bonds and some other second lien bonds. They settled and they decided that they would contribute all of their money from the second lien bonds. And there were more bonds than this, and their secure bonds. It was roughly $718 million. They decided it was a 507B claim, which I was referencing earlier. So the $718 million that was owed to ESL as second lien debt, he withdrew that claim as part of a settlement. So that just made it easier for us to get paid sooner. That's all.
I got you. And writing on that, did you talk about it here? I don't know if it's something that you wanted to emphasize today, but wasn't there something about ESL subordinating or putting themselves after some sort of unsecured claim that comes after?
Yes. So
Something-
ESL subordinated their debt to ours. So we went over section 1123A4, and it says all creditors are treated the same, right? Unless the holder of a particular claim or interest agrees to less favorable treatment. So Eddie Lampert said, I want to show you how confident I am. I'm going to let all other unsecured holders get paid before me. When they get paid, I'll take my money. So he subordinated his unsecured debt to our debt. So we actually get paid before him. And that's a non-issue now because there's so much cash left after paying the debt that we're good. But prior to him purchasing the assets, he said, I'm so confident that we're going to sell enough assets to pay everybody off. How about you guys pay me last? You pay off Blair's bonds, Adrian's bonds, Raul and Andrew and Henry's bonds, and Roderick. You pay off Tammy, pay off everybody else's bonds, and I'll get paid last. I'm that confident that these assets are worth more than what the market has been saying. And the market has been saying that the real estate was worthless, Die Hard was worthless, NFL Solutions wouldn't get any money, Sears Online and Kmart Online would crash if they closed all the stores. Right now, Macy's is making roughly 30% of their money online and 50% of their income from their credit card. So roughly 60 to 75% of Macy's revenue comes from their online business and their credit card. If they closed all their stores, I don't think the online business will be affected. In fact, the online business goes up. And we saw that during the pandemic at JCPenney. At JCPenney, the online business increased because people couldn't go to the stores. And it's kind of interesting that people said, nobody's in brick and mortar anymore. No problem. He closed the stores and we have an online business that's been thriving. And it was thriving when we had the stores with washers and dryers and Kenmore and Die Hard and all the other good things that are going on.
I do have another question. Thank you for
Go
that.
ahead. No problem. Go ahead.
Just for clarity, you were going through and you were contrasting the October 29, 2022 date with the February 2019 date. And two significant things happened on those dates, but I got a little confused between what happened when. Something about assets moving or doing something.
Okay, so in February 2019, the assets of Sears Holdings were put into Transform. So the actual purchase date is deemed February 2019. So the official liquidation process started then. But the effective date of the Chapter 11 plan starts the time period in which the liquidation has to be over. And the time period started on October 29, 2022. And they generally give you 3 years to complete the liquidation. And then the next taxable year, by that time, you have to have everything done. And the next taxable year, the end of the next taxable year of October 29, 2022 is around February or March 2025. 26. So it's 3 years from October 29, 2022, and the end of the third taxable year, that's what the language says you have to be completed, would be February or March of 2026. So I believe that's when the process has to be complete, but I'm not sure.
And
Not
that's
sure.
that February date is based on what Transform's fiscal year or something?
Yes. Transform and Sears fiscal year was February, because most retailers' fiscal year ends in February. That's how they do it, the retailers, February. So that's what it appears to be the deadline, but I'm not sure.
Yeah. So last two questions. One, how do you imagine this reemergence process might unfold? I know people have seen different things happening on their bonds and their accounts, and this disappeared and the name changed and and we've talked about Land's End and we've talked about a few different things. I know it's just imagination, you don't know, but could you kind of reiterate for us kind of how you imagine it might, what things we might see happen between now and when?
Yeah. Well, I think that Transform, the operating businesses of Sears Holdings, it's called Transform. I think they're going to merge into Land's End, LE, stock symbol LE. I think they're going to merge into Land's End. And I think the real estate part of Transform, the transformcoproperties.com, I think they're going to merge into Seritage Growth Properties, which is SRG stock symbol, because Eddie Lampert controls both of them. And generally, when they exit and they do the payout, they merge. The formerly bankrupt company merges into companies that are already public. It's what's called a reverse merger. So I think we're going to get two stocks. I think we're going to get stock in the real estate company that owns all the Sears remaining real estate that's being redeveloped and sold. And I think we're going to get another stock in, the businesses, Sears and Kmart Online, Kenmore, the Sears credit card, and of course, Land's End. I think we'll get two separate stocks, what they call an operating company and a property company. They call it OpCo and PropCo. JCPenney did a very similar structure. So I think we're going to get two stocks. I think shareholders will get two stocks. And I think it'll be a merger of Land's End with Transform, and the Transform properties will merge into Seritage Growth Properties. That's what I think is going to happen. Don't quote me, but I think that's what's going to happen. And I think we'll get two separate stocks, because the goal, Eddie Lampert said, even at the meetings, the last Sears Holdings meeting, he said, we may need to separate the real estate from the operating companies. And that's what's been done. They have different LLCs. They have different public entities. All you have to do is merge them. And there are people making offers to buy Land's End. Other companies have made offers to buy Land's End. And Eddie Lampert put out a statement maybe less than 6 months ago. And he said he was interested in purchasing Land's End or selling his interest. So I think we're close. And I think that's what's going to happen. I think we're going to have two stocks. And I don't have any information that's not already publicly available. You can Google Eddie Lampert and letter to Land's End, and you'll see that he values Land's End at roughly $80 to $90 a share. Is currently trading for $11 or $12. And I believe his valuation is correct. And Seritage Growth Properties, stock symbol SRG, I think the company valued it at roughly $15 to $18 a share, and it's trading at $3 a share. So I believe that valuation. So I also own SRG and I own Land's End stock, but I'm not recommending that anybody else buy, sell, or hold those stocks or securities. But that's what I own.
I love it. Thank you. Last question from me is, you mentioned something about going concern businesses. So when you were going through these lists of assets and liabilities and demonstrating that you find $13 billion in equity still in the company that, shareholders have, ownership in, et cetera, you're saying that is without calculating in what the business is worth on an ongoing basis. It's just what's in the bank account, for lack of a better way of saying it. Is that right?
Absolutely. We have not valued any of the companies going forward. We only valued what was liquidated and the money that was earned over the last 6 years.
So even with this projection or your estimate that you have here, let's say we all got our piece of the pie tomorrow, you're saying that the business is going to keep making more and more and more and more money, hopefully, obviously, but that this pot is going to continue to grow. So if we hold on to our piece of the pie, our piece of the pie is also going to grow over time, in your guess or your...
Yes, because the Sears credit card, which I own, it says Shop Your Way on it. Mm-hmm. That credit card is still earning more than $300 million a year right now. And the Sears and Kmart online business is still earning more than, and Sears Home Services collectively, still earning more than $600 million a year right now since February 2019, and still growing. The royalties from Craftsman by Sears, it's roughly 30 to 40 million a year, and they're going to pay those royalties until 2032. That money's still coming in. And the leasing income from those properties that were redeveloped that we own and we partner with, we've got apartment complexes going up all around the country. Go to transformcoproperties.com. We've got full apartment complexes going up on land that used to be Sears buildings. So we're going to get that rental income. We've got them going in New Brunswick, New Jersey. Got them going up all over. The Hamptons just took the old Sears Kmart and they leased it out. Target leased it out. We own a Sears in the Hamptons, and Target just leased it out. So all that income and that money is still going to be coming in. Plus, we've got about 11 billion in cash. We can buy other businesses.
Got it. So that's why this is a snapshot. This is like
just the cash and real estate. That's it.
Today. Amazing.
No value given to the other businesses. And my estimate of what that entity is worth is at least $10 billion. So you're talking a total of $23 billion in value, all from a company that was, quote, bankrupt 6.5, 7 years ago. So if we have 100 million shares of stock, that's more than $100 per share to shareholders. More than 100 per share to shareholders, just based on those rough numbers.
Again, no financial advice.
No financial advice. I'm not suggesting that anybody buy, sell, or hold Sears Holdings bonds, stock, Lands End, Syracuse Grove properties, or anything else. Simply my personal opinion.
Perfect. Thank you.
I think we're good, eh?
I think we're good. All right. I appreciate everybody's time.
Thank you so much.
Thank you.
And this will be posted soon on our YouTube channel for Triangle Blockchain Development. So thank you everyone for coming out, and stay tuned. All right. It gets better in the end. Trust me. It gets better in the end. All right.
Thanks,
All right.
Blair. Appreciate you.
Yes. Thank you, Adriane. Thank you, E.
Okay. All right. We're good.
Yes, we're good. We're good.
Okay. Solid.